Well, notice the big drop in Ethereum from 3,200 to 2,900. Um, what do I see? Um, Nothing different. This is the time of the year people are trying to cash out. A lot of people are have borrowed money. They borrowed money at lower interest rate when the interest rates are going up. Now it's costing them more money to hold their Ethereum, and they don't want to do that, so they're cashing out and paying off some of the borrowed loans. And also, I mean, what I saw is like Ethereum went down about 10%, um, and I believe uh, Bitcoin went a little less. Is it permanent? I don't think so. If you watch the trend, this is the time of the year when it goes down. It's going to go up again. Uh, Weak players are going to get out, and then a strong player is going to get in place of them. And basically, once the Ethereums go into the right hand, they will go up because there will be a demand for it, and they are not going to give up on that. Um, I generally, as a rule, um, try to hold it as long as I can, and unless I need the money to pay the bills or something like that, then I'd cash out. But I don't generally look at the best timing. Uh, so whenever I need it, it's kind of like currency. Like you don't like use dollars whenever you need to. You don't wait for the when the dollar is at highest point. But yeah, for all the uh, new people who are new into this crypto sphere, this is very normal. And just to give you an idea, I've seen it from anywhere from $5 to $4,800. So Ethereum per Ethereum, and personally, I've mined 3,000 plus Ethereum, and which tells you that I've seen quite very fluctuation in pricing. And I've sold at $5, and I've sold at I think highest I've sold is $4,200. But I mean, I didn't sell it at $4,800. But that's the thing, you don't know when is the right time to sell it, and if you sell it, it becomes a taxable event. And you know, I didn't want to sell it when it was peak. It was like last year, and I didn't want to add to that tax burden, so I did not sell it. I should have, but I didn't. But I didn't know that it's going to go down. Watching the patterns, it could possibly be, but it doesn't have to follow the patterns. That's the thing. It can do what it does traditionally or go up. Like, for example, if you notice that from the whole last year, uh, it was around $600, and it went all the way up to $4,800. So, uh, and along it went to 4,200, then dipped down to 1,700. So it just keeps doing that, right? Uh, uh, all it is basically people buying it high and selling it low, or panicking, and then of course the real investors sweeping in and taking those lower hanging coins, or fruits, whatever you want to call them. But the thing is with crypto is basically long term game. If you look at overall, like kind of like you when you watch stocks, if you look at like a 10-year, um, I mean, Ethereum hasn't, I don't know, what is it, 2016? So yeah, it's been um, going up. So no matter what these ups and downs are, it could drop to 50%, but then again, it can go back up high again. So it doesn't make any difference. It's just that it depends on how strong you are. So My recommendation, if you want to get into Ethereum, don't put all your money into it. Only put the one that you could afford to lose and be ready for it. I mean, if you don't like this, don't do it. That's the part of with any business or investment is that when you put your hard-earned money, uh, you are you are going to take losses and you're going to take some gains. If you just want gains and without losses, that's not how it works. And that's not a business. It's basically, you might as well just put your money in the bank and get the fixed return. But the thing is, the banks are taking risk. So banks take your money, you put the money in the banks, and they give you low interest rate, but you're guaranteed that interest rate, and then they invest it. So if you, for example, Citibank lends the money out to the credit cards, and the person who's using a credit card paying it 15%, 9%, 20%, 25%, whatever the interest rate they're paying. So they're giving you 3% and they're earning 25% on it, but not all of them are good investment. So there's a risk. Now, you wouldn't do it because you are going to be afraid of those risks, but banks are not, because they know overall they're going to win. They so let's say half the people, don't go half, because they look at the credit reports and all this stuff. So let's say some of the percentage, like say 10% of the people default. You're still earning enough money, and they're making quite a bit of money. So if they're earning 25% and they lost 10%, it's still ahead. So I mean, they made 15%. So which is a lot better than what you're making is 3%. So yeah. So there's calculated risk that banks are taking, and you are afraid of taking risk, and that's why you're making less money. Crypto generally, like last year, has like many-fold increase in value. So if you put $1 in there, would be still right now at this rate would be like $5. Okay. And at peak it was probably $7, $8, $9. So that's the risk. Can you lose all your dollar? Probably. But didn't happen that way, because a lot of people had plenty of money, and they were looking for opportunities to take risk, because the return in other investment was low or hard to get into. So everything was getting saturated, and people were looking for stocks, growth stocks, cryptos, anything that they can increase their net worth. And this is what happened. Now, are we going to see downward trend? Yes, we are. Have you reached the bottom? Don't know. I don't know how many weak players are still in crypto affair, and there are people who are panicking, and people who are seeing the opportunity. Generally speaking, when it reaches the new low, it tends to settle down and then starts going up. Uh, uh, so I'm not the only one looking, and other people are looking at this chart too, and they're looking at, oh wow, okay, 2,900 is a new low. And then there's somebody going to say, oh, this is a good time to buy, so we can increase our net value. So they're going to buy, and then it's going to go back up to 3,200, and they've made literally 10% return in very short time, because this is where crypto is volatile. So if they put $3,000 or $2,900, they will get out $3,200. So that's the 10% gain that they made, and they can cash out that 10% and leave the rest in there. Or they can cash out all and wait for another opportunity like that. Long-term investors generally don't do that. This is like daily traders who trying to make money quickly. You can lose a lot of money, because daily trading is not easy. you have to look at the time like this. This is when you actually make the money, because you, as soon as you realize that it's going to go down, you sell, and then you wait for it to go all the way down, and then you buy again. Okay, when you think you reached the bottom, and then it goes up, and then you've made your extra 10% or whatever the dip was. So yeah, I mean, it's up to you to play it safe and put your money in a low yielding bank account, or CDs, or even some stocks. Like Bitcoin is actually faring better. It drops less because there's a lot more market cap, and a lot less people selling it because there are not that many floating around. And the people who are holding are long-term investors. So Ethereum, on the other hand, a lot of miners, and they have bills, and there are a lot of people who are holding it are not long-term investors. So and it's also cheaper to get into. So a lot of people don't realize it doesn't matter if you hold $3,000 worth of Bitcoin or Ethereum. Holding a coin makes no difference. It's just the yield that you get on it. So Bitcoin yield drop is less, increase is less. Ethereum drop is higher, increase is higher. So it's more risky to do Ethereum than Bitcoin. So you want to make more money, you want to put in more risky proposition. And altcoins are even more riskier. Like some of the coins, they're newer coins, they can go up and down much harder than the Bitcoin or Ethereum. But I tend to not venture into that, but some people do, and they make a lot of returns. But then again, they're taking a lot more risk. So this is my 2 cents for you. If you are just getting into crypto market, and you're trying to see what you can do with your no interest earning saving account. This is pretty much what most people are thinking. I'm getting questions from family and friends, and you got to know, can I tell you you're going to make money? No. But you have to watch the market, you have to watch the patterns, and it's kind of predictable, because the people who are doing this, they are not just randomly doing things. They are looking at certain factors. They know when is a good time to sell, when is a good time to buy, and based on the patterns and trends and market. And it doesn't have to make logical sense, which is why you see meme stock going up. People are just looking at what the market is doing. There are a lot of things that you have to pay attention to. But yeah, good luck with your venture, and not giving you any financial advice, not telling you to go buy crypto, just telling you what my experience is. And I hope you like this kind of video. If you like it, please subscribe, give me a thumbs up, like and share, and I will make more videos like this for you guys. Bye.